Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Thursday, March 5th. Firstly to the Nasdaq 100, and here we see a change of trend today. This current candle has formed a higher high and a higher low when compared to the previous day's trading. So we have a new first time frame uptrend in place, but that's been formed on a fairly small bodied candle and very much in the same vicinity as the size of the previous body, and almost the same size as the body prior to that. So quite some uninterested trading over the last couple of days in terms of the net effect between the open and the close. This suggests that even though the trend is to the upside, perhaps we don't have the upside momentum to perhaps sustain the trend, and there is a possibility of a new downtrend forming. But the important thing here with this candle is that the buyers have closed with control. The buyers have managed to close between the midpoint level and the high, and that suggests that there is some strength shown from the buyers, also with the fact that the market has been able to take out the previous high, forming this new first time frame uptrend. Suggests that the buyers certainly are the stronger party, but certainly not as strong as we'd like to see at the initiation of a new first time frame uptrend. Now that doesn't mean that we may not see the follow through, but if we do, there's certainly a very good possibility of the market testing to the major high here around the 44.83 level, 44.84. And the important thing here with where the market's tested to with these lows is this highlighted yellow zone of previous support extending down to the swing low here about 44.21. We can see all of these candles here where the market was rejected from this area to the upside with the buyers coming in, and that's what we've seen over the last 3 trading days. The market unable to penetrate through that area, and the sellers unable to close within that area. And this suggests that what we probably should have seen in answer to this strong first time frame uptrend prior to this recent trading was a more significant pullback, and it really does say something about the lack of strength of the sellers. So a benchmark here is going to be the 44.21 region, and the zone here extending from 44.43, and if we see a bearish close within there, we could quickly see the market trading down to around the window that was opened up about 43.47, 43.48. If the buyers do come into the market, very likely test to 44.83 and perhaps even beyond. Now that test to higher levels would be in line with the market being bullish in the longer term and medium term time frames by trading above the cloud and the Kijun-sen and supported by the Chikou span. So this Chikou span suggests that there still is some solid upside momentum in this market. Just one thing to watch for is this flat Kijun-sen, and price action tends to be attracted back towards a flat Kijun-sen, and this attraction back towards the Kijun-sen has been on these fairly weak candles in terms of the strength of the sellers, and that really does add further weight to the idea that we are likely to see the market more so test up towards the high here, 44.83, 44.84, rather than trade down through 44.21. Now just looking at the Fibonacci extension here, and what we're doing is examining the relationship of this new first time frame uptrend to the immediate previous time that the market was trending up in the first time frame. And here we see that with the market establishing this new trend, we don't have any significant levels until the market tests to the 23.6% level, which coincides roughly with the major high. That level is at 44.86. And it suggests that if the buyers are strong enough to breach that area, there is a good likelihood of the market trading to the 38.2% level at 45.26. Now just looking at patterns, and here we have formation of something of an inverse triangle, megaphone type pattern, broadening formation. The problem here is that the broadening formation tends to be on a much larger scale than this. The trend leading into it is not what we'd call a significant trend, and it should be a much more substantial trend than this, but the implications here are pretty much the same, and we can call this probably an inverse triangle, and what we want to see is a close either above or below the upper or bottom barriers to confirm the breakout. Now very difficult to trade these because the market could go on to make continuing higher highs or continuing lower lows, so very, very difficult to trade in terms of these barriers. But I think the important thing is that if we do see a strong bearish close down below the bottom barrier, that certainly would suggest that the sellers, or the sentiment of the sellers, has changed. When we look at the interaction of the sellers here with this bottom barrier in the recent past, that it's been very mild, and we've had upside price rejection and the sellers losing commitment every time that they've reacted to that level. In terms of the bands here with the Nasdaq 100, and here we saw previous very strong bullish activity up above the upper band, the market finding support at the upper band, being rejected strongly from there, and then for the last couple of days trading within the band in a manner that isn't terribly strong in terms of the sellers. More so the buyers are the stronger party here, as already mentioned. The problem here is that if we do see the market attempt to rally, there is potentially strong resistance at the upper band now at 44.69, so that's an area that we should be watching very, very closely, and a strong bullish close above there would confirm the resumption of a new strong medium-term time frame, but price rejection from there in a bearish manner could end up seeing the market test down to the middle band and mean reverting at 43.86 if the market is strong enough to breach those barriers that I've already mentioned. Moving next to gold futures, and here we see the second last candle on the chart is the one that has finished trading, and some important features here. Firstly, the continuation of the trend to the downside. The day prior to today's trading was an inside day, so hadn't changed that prior trend that was established, that downtrend. Today's day is an outside day, and that's a day where we have the buyers strong enough to take out the previous high, sellers strong enough to take out the previous low. It does suggest that there is potential for a change of trend to the upside, but the important thing here is that the sellers have closed with control in this market, and very strong control by closing very close to the low for the day's trading, and the strongest control that we've seen for the last 3 days, very similar to the day where we tested just below the 1205 level and below the Tenkan-sen indicator. Other important feature is the large shadow here, which represents the buyers losing commitment up above the Tenkan-sen resistance. The Tenkan-sen trades at 1206.5 at the moment, and very strong price rejection from there. The black body candle suggests that we continue the downside momentum in net terms, not strong, but significantly there's no strength from the buyers in terms of upside net momentum. And also the fact that we've taken out the round number 1200 in a bearish manner does suggest that there is potential for the market trade lower. So that 1200 has been an important area in the recent past. The market failing to close down below there in the last couple of weeks, and the bearish close down below here could be significant. Now the problem is, however, that the support down below 1200 extends down to around this swing low, and that swing low is at roughly 1190. So we won't be happy with the market trading lower until we're able to breach that area, and probably breach the 1185 area, but we'd like to see some strong bearish activity in the market moving down to these levels. At the moment, with this current candle that's developing, we are seeing resistance coming in around 1200, just in a small manner. The market hasn't been open for long, but that is going to be an important area there, as will the Tenkan-sen trading at 1206.5. Now, continued downside price activity in the market testing down to perhaps this swing low at 1190 would be in line with the market being bearish in all 3 timeframes by trading below the cloud, the Kijun-sen and the Tenkan-sen. And just looking at the Kijun-sen, that is still pointing down, and it's reflecting some solid downside momentum in this market, whereas the Tenkan-sen is flat, and it's suggesting congestion over the last couple of periods and weak downtrending price action. Now, just looking at the Fibonacci extension, examining the relationship of the current first time frame downtrend to the previous time the market is trending down, and here we see the market interacting once again with the 78.6% level for the 3rd consecutive trading day today, and unable to close down below there. Suggests that it could be a significant area, but we haven't seen any strength from the buyers at the moment to give us any confidence in a new uptrend taking place around this area based on the Fibonacci area here. We are seeing buying coming in here, and the 78.6% level hold as some support, so there is a possibility of the market trading higher off this level. But with the sellers in control here, not a lot of faith in the market changing trend. Now, if the sellers do come into the market and are able to breach through this 78.6% level, we could see the market testing down to the 100% level, 1190, which coincides with that swing low, so strengthening the amount of potential support around that area. So that's going to be a very, very significant area of support and maybe a strong barrier to further downside price activity. Now, just looking at the bands here with gold futures, and we have something of a squeeze going on. So with the market, all of this indecisive trading and the market attempting to rally, we have something of a congestion area here. The market now just trading within the bands previously, unable to breach the middle of the band, so mean reverting and then some rejection from there. But for the past two candles prior to today, the bottom band holding a support, and for today just breaching below the support of that bottom band. So it suggests that there is a possibility of the market trading down to lower levels. Now, as this new candle is developing, we are seeing resistance come in at the lower band around that 1200 level. So a very, very important area here, and there is a possibility of the sellers coming in and possibly testing down to that 1190 area, or if we see the market rally up through that bottom band, potential resistance at the middle band roughly about 1212. But the important thing here that we're seeing is that the bands are starting to squeeze. It means that we should start preparing for new potential trending activity. No sign of that yet. Perhaps we need to see the band squeeze up even more, so we could see more retracement back towards the middle of the bands, or more formation of this congestion area. Moving next to the Euro US dollar, and continuation of the trend to the downside, candle with a lower high and a lower low. But the formation of an indecisive spinning top type candle, it does suggest possibility of a change of trend to the upside. Now, we still do have a black body that's formed, so it suggests that the sellers still have downside momentum in net terms, not as strong as previously, and the fact that it's not as strong does suggest potential for a change of trend, but certainly no sign of strength from the buyers here. And also the market hasn't closed down at the lows. We've seen rejection from lower levels, with the sellers just closing with a moderate level of control, fairly weak control. But the important thing here is that we haven't seen any strength from the buyers, no control from the buyers. The buyers were rejected from higher levels above 111. So a very indecisive candle, but the implications for the downtrend are that the downtrend may be in danger, and what we require here would be a confirmation of a change of trend, with the market taking out the high and forming a higher high and a higher low. Now, if we do see that, there is potential resistance up to about the 111.60 area, that previous support region, or up to the Tenkan Sen trading at 111.87. There still is a possibility of the sellers continuing to the downside in this market, and if they do, very good likelihood of them trading down to about the 109.02 level of support. And just looking here at the bands, we see the market continuing to trade outside of the lower band, so suggesting we have a very strong negative bias in this market in the medium term time frame. We saw the squeeze going on, the strong bearish breakout, the market attempting to rally to the upper band, being rejected from there strongly, the strong follow through confirming the trend, and now we're likely to see any retracement to find initially strong resistance at the upper band at 111.56 at the moment.